So today we are looking at chapter. Today we are looking at chapter 8. All right. The last time we met, we discussed chapter 6, audit evidence and sample. Now we are moving to chapter 8, which is test of control. Now, why do we need to look at this chapter? Now, this chapter is more like an add-on or an extension of chapter 6, audit evidence and sampling. Okay. So when the external auditor comes to audit the client, right, he must have his audit strategy in place. He must have his audit strategy in place. Okay. He must have his audit strategy in place. The audit strategy can be referred to as all the planning decisions that the auditor has arrived at in the course of the audit engagement. All right. So is that planning decision, which we call the audit strategy or audit approach, that will inform the auditor on how he's going to go about the audit. And if he has adopted, please mute your mic, please. You can't afford distraction here. Omotayo, mute your mic, please. So, like I was saying before that interruption, as I was saying, right, the auditor has a list of strategies to be adopted, all right? But if he has decided to utilize a system-based approach, which is basically what we know as what? Using the internal control system approach, then he will not be left with any other option than to, first of all, ensure that he assesses and confirm the efficiency and effectiveness, the strength of the client's internal control system. All right? He has to check what we call what? The effectiveness, efficiency, the strength of the client's internal control system. Now, internal control system is simply a whole system of control, financial or otherwise, established by management, right? In order to ensure that assets are safeguarded and the organization comply with all the existing laws, and also ensures that business are run in an efficient and effective manner, thereby achieving the business objective. That is internal control. Simply put, internal control are those policies, procedures put in place to drive the business to achieving its organizational set objective. So if you don't have any organization that has existed over 100 years or that has outlived its founders and is still existing till today, such organizations are said to have what we call what? A strong internal control system. Or we say that the internal control system of the organization or such organizations are effective and efficient. Now, for the auditor that is coming to audit the client, remember, his primary duty is to ensure that the financial statements are prepared in line with applicable financial regulatory framework. And it also needs to ensure that the figures, okay, from the source document agree with the financial statement. And also, it must ensure that proper books of accounts have been kept. Now, all of these are the primary responsibilities or primary duties of the external auditor. Now, because he's at the forefront of ensuring that the financial reporting does not contain any material misstatement, he has to perform two tests before he can decide to obtain information or obtain sufficient and appropriate audit evidence from the existing financial reporting system that exists in a client business environment. All right? So what I'm saying is this. For the auditor to have an assurance, reasonable level of assurance, that whatever the client has provided in the course of this engagement, right, is enough. Or I would say it provides a reasonable level of assurance. For him to have that level of assurance, he has to perform 2 tests. Now, those 2 tests, before now, we call those 2 tests substantive testing and compliance testing. All right? But I'm telling you today, if you go and use substantive testing and compliance testing in your audit, assurance, and forensic, I'm telling you, your examiner will mark you down. Your examiner will penalize such students. You know what I'm saying? So the new terminology for these 2 tests, now compliance testing is the first that we do, has been replaced with a new terminology known as what? Test of controls. Known as what? Test of controls. Why the substantive testing has also been replaced with test of detailed transaction. Test of detailed transactions. All right? Now, why am I saying this? Because you need to start getting yourself acquainted with some of this audit terminology. It's highly essential and it is not negotiable. Before the auditor can say, oh, the information that the management has provided can be relied upon, you must have performed those 2 tests, test of controls and test of detailed transaction. What do you mean by test of controls? Test of controls are those tests or procedures that are performed in order to assess and evaluate the efficiency and effectiveness of the client's internal control system. All right? So how does the auditor do this? Now, the auditor will take, before he left his audit firm, he has an already, what we call overall materiality. What do I mean overall materiality? Overall materiality has to do with ensuring that the risk of material misstatement has been provided for in the course of the audit engagement, so that nothing or no transaction or no account balances will slip over or will slip by the external auditor in the course of the audit. Okay, so he has like a sample that's going to take for him to be able to confirm that the internal control system or the financial reporting system that exists in that client organization can be relied upon. You can say, can be trusted, can be relied upon. Those are terminologies from the audit perspective. Now, that test that we do first is called test of control. You need to be sure that the internal audit system that is in place in the client organization is actually effective and efficient. That is, those controls that they are put in place are actually effective and what? Efficient. All right? Then the auditor also needs to look at whether the internal control system or the system of internal control that have been put in place is designed to minimize the risk of material misstatement. Hence, the auditor will check the controls in its procedures for the documentation and evaluation of the what? Of the controls. All this looks abstract, right? Let me put perspective to it. The auditor wanted to go and audit a client, ABC Limited, right? And he gets to ABC Limited. What will he do first of all? He has to, because the management of ABC Limited, the management, we will need to obtain sufficient and appropriate audit evidence from them, aside from the one that is going to gather on his own while on the engagement. So before he can rely on any information provided by the client management, the first he needs to do is to carry out what we know as what? Test of control. And part of the test of control he was going to do is to deploy internal control questionnaire. The internal control questionnaire is a set of inquiries or questions, right, that addresses the areas of strength, effectiveness, and efficiency in the client's internal control system. So it's just like your questionnaire that you did while you are in university or you're in polytechnic when you are writing your project. If you agree with me, or if you can remember, your project comes, your chapter 4 project is always discussed in chapter 5. That is data collection and analysis. That is the administering of the questionnaire to your respondent. We do the analysis in chapter 4. We call it data collection and analysis. So the same thing the auditor will put forward. We need to create a pool of questions, and they must be what? Open-ended. That is, you must just have yes or no, or yes and no. You pick one of them. So depending on the responses collated from the client or from the client management or from the process owner in the client system in the client environment, we help the auditor to determine whether the internal control system that is already in place can be relied upon. I hope that is clear. So that is what we need to know. All right. That is what we need to know. All right. Judith Akagwe is raising her hand. Sorry if I murder your name. Sorry. What's the question? Please go ahead.
Please, I think I'm not really getting it clear. You mentioned that there are now like two kinds of controls as against the previous kind of controls, where you mentioned that the examiner will mark one down if they mention
Yeah.
substantive testing or something. Then
Yes.
the the updated kinds of test of control, is it the first one you just explained or the second one? Because from what I was able to get was, I mean, to my little knowledge of it, you mentioned that it's a control testing, I don't know, but is testing the internal audit system or control to ensure that it is effective and efficient. Is it this test of control? That's
Yes. Yes. Yes.
okay. So you're still in the first one.
It's the one I'm talking about now because the chapter is on test of control.
Okay. Sorry, please. What are the kinds of test of control? Just to be clear.
I've just been explaining it now. I just mentioned internal control questionnaire. I was just explaining it now. Did you get that explanation I was talking about when I talk about the administration
I
of
think I got it.
questionnaire?
Yes, yeah,
Uh,
but I think I got it mixed up when you said something about substantive testing and that's the old and new kind of test of control. So that's why I think I got it mixed up.
okay. Now the thing is this. I said that those compliance testing and substantive testing are now moribund or archaic. You cannot use
Okay.
them again. And I said that they have been replaced. Compliance testing is now known as a test of controls, while substantive testing is now known as a test of detailed transactions. And I've said
Oh,
I've just been explaining the test of controls. I've explained the test of controls, and I'm trying to put perspective to that you to
oh,
understand
okay,
what
okay,
do you mean by test of control? How do you administer it? How do you get it done? That's why I
okay,
made mention
okay.
of the internal control
Control.
questionnaire, how you apply it, how you administer it to the process owners. So the rest of you doing that is able to collate information, obtain information. Remember, when we look at chapter 6 under audit evidence and sampling, we talk about method of obtaining what? Audit evidence. And one of those
Yeah,
method of obtaining audit evidence are through what? Inquiry.
yeah.
What do you do when you are inquiring? You are asking questions. How do you ask questions when you are doing audit? You can ask questions either by interviewing the process owner, or you conduct or you administer your internal control questionnaire, right? Or you even use a flow chart. You can also use flow chart to, so as they are explaining to you, if you are someone that is highly intellectual, you understand technicality very well, you can tell them that, okay, as they are telling you, as they are presenting the information to you, you draw up a flow chart and see whether the flow chart conforms with what they have been saying. So the test of control, I'm just explaining one of the methods
Mhm.
of performing or testing the controls, which is the use of what? Internal control questionnaire.
Okay, thank you
I
so
just started. There are still other methods you can use. Another method you can use is the use of what? Interview. How do you do that? Inquiry, asking questions, asking the process owner. Okay, who are the process owner? Those are the heads of department or those that are in charge of operations. Okay, those that are the custodian of the policies and procedures of the organization. You ask them. So by the time you ask them questions, from the feedback you get from them, you'll be able to determine whether they even understood the how the internal control system of the organization operates, or rather there are gaps or there are weaknesses in the internal control system that exist in the client's organization. Is that clear, Judith?
yes, sir, it's clear. Thank you very much.
All right. Then the third, I was trying to put perspective to test of control, because if I continue to just talk like this, right, without putting some attention to it as I just explained now, it will look very vague, okay, and it will look very abstract. That's why I'm trying to put perspective to it. How do you get it done? It's not something that is cast in stone. It's not something that is rocket science, right? It's something that they do every time, and you also, if you work in an audit firm, might be involved or be engaged in some of these procedures unknowingly. Maybe you didn't know, or it was not properly explained to you that what you are doing at that particular point in time is test of control. Even sometimes the clients might also be involved. Like the one that said they were asking you questions, interviewing you, how does this thing work? What's the process for payment? What's the process of raising invoices? All of these will come under interview, right? So these are methods at which I don't well, I believe you have not done internal control, right? By the time you do internal control, right, this class that we just had today will also help you in understanding chapter 7, internal control system. Okay. So don't worry yourself. If you have any question, you can ask. The essence of this class is to make the class as participatory as possible, then also to learn as much as possible. All right. The essence of this class, we are trying to what? Demystify uh, audit assurance and forensic. All those things that look like mountain before us when we read, this thing I don't understand. What we are trying to do is to break it down into nitty-gritty, so that at the end of the day, you'll be able to have a better understanding. Even by the time you pick this material up again by yourself and you read, right, it will be very clear to you. You will not just be reading just that you're not able to understand. You are reading with the intention of what? Comprehension now. That is the essence of this class. My own duty is not just to be reading the material to you, is to explain it to you so that when you read the material as many times as possible, you will be able to understood the essence of those information or that information that you have contained in this material. Okay, my essence of this class is not going to just read it out and we go. No, it's for me to explain it, for you to digest it, and for you to be able to make meaning out of it on your own, even if it comes out in the examination. You are not able to see it in verbatim, even if you are going to paraphrase. Your paraphrasing should be able to make points, okay, significant points, or to get to fetch you significant marks, okay, that will enable you to cross the line, okay, towards passing audit assurance and forensic. Now, somebody is asking question that the screen has not moved. I've not moved out, or I'm still in this area. I've not moved. I'm still explaining. All what I've been, you have been following me right from the time we started. You see that all the things I've been saying, they are still within this area. All right. So I have not moved. So as we progress, I will move. So I cannot just move. I will not be as if I'm moving faster. The reason why we started at 8:30 is that we started that by 8:30, all the students must have gathered in the class waiting for the facilitator. We don't have time. Once it's 10:30 now, once it's 10 o'clock now, most of us will be tired. We will say, this class is can we say that we leave it to the next time? And I'm trying to see how much we can cover before it gets to that time. So that is it. There's no African time in the class. 8:30 is 8:30. Please take note. Next time, once it's 8:30, please gather in the class so that when I start, or whoever the facilitator is, when he or she comes on board, he can start on time. We don't have the time. It's not best practice for us to be waiting for students to come. In the physical class, it's not the same. That's not the practice. The practice is that students would have already come to class. The facilitator will come and take over. Not that the facilitator will be in class and students are walking in one after the other, much after the facilitator has started. So let's imbibe good practice. All right. So that is that. So we move on. If you have any question, you can ask your question. I just need to be very clear on what we are doing because we know that this is not, most of us are already tired, right? Some of us are coming from workplaces. We've been on the road since 5 a.m. and we are staying, extending the time beyond the normal time. That will not be fair, all right? So let's do what we have to do on time before fatigue sets in finally. And you cannot take nature. I hope you know that. All right, so any question, you can ask your questions while we proceed. So I was explaining the test of control, right? So the test of control, like I said, the essence of the test of control, so that the auditor will be able to what, place reliance on any information that is furnished by the management to the auditor. If he has not performed the test of control, there is no how we're able to place reliance on the information that will be provided or that have been provided by the client's management. It's like going to somebody else's house now, right? You go to somebody else's house. If you visit your friend's house, whether it's a close friend or it's an acquaintance or it's a stranger, first impression always what matters. You go to your friend's house, you go to your acquaintance, you go to a stranger house. If the ambience is not conducive enough, you will not be able to even sit down, not talk of getting entertained in that house. If the ambience is not receptive, right? You will not be able to even sit, not talk of having refreshment or taking refreshment in that person's house. Or if the ambience is dirty, well, I know that some people maybe they like dirt, but in a normal situation, when a place is dirty, it is not good to eat in that kind of a place. And that's the similar thing we are looking at here. Although this is not the residence of a stranger or of a visitor or of any acquaintance, but what we are saying here is that before you can take something from somebody, you look at that person and be sure that that person can give that thing, or what the person is going to give is something that the person can actually give, not that it's just giving you just to deceive you at the end of the day. That is similar to what we are saying now, right? So the test of control is what we are going to focus on. When we get to test of detailed transaction, I will still explain it to us, all right? So there's no issue, there's no cause for alarm, right? But let's proceed with what we are saying. So I've just explained test of control, right? Now, after the auditor has conducted or has performed the test of control, the essence of that test of control is to be able to evaluate the strengths, weaknesses, effectiveness, and efficiency of the internal control system. Now, let's say he's able to, after he did this, he's performed all these tests of control and resolve that the internal control system is weak, right? What will he do? It's called that the internal control system is weak at this first test, which is test of control. That will spur him that will motivate him, that will make him to perform the second test, to be able to get what? To have a reassurance, to confirm that whether truly the internal control system is weak or not. So if he has done the test of control and discovered that all the process owners, all their responses to the questionnaire, all the interviews conducted, all the flowcharts drawn, at the end of the day, he did not mirror what's supposed to be in existence. That means there's a weak internal control. That means there's a gap, there's a disconnect. So the author will proceed to do what? Test of detailed transaction. Now, test of detailed transaction is more detailed. is a test that is more detailed, trying to what? Validate, trying to what? Vouch, trying to what? Verify transactions and account balances that are posted in the what? In the financial statement. These are tests that are performed now to verify, validate, or vouch transactions and account balances that are contained in the financial statements in order to ensure that there are no material misstatements therein. All right. So, like I said, the test of control, after he has been able to, after he has deployed the internal control questionnaire, he has performed the interview, right? He has drawn the flowchart. The next thing he needs to do is to proceed with the next level of that test of control. And you agree with me now that the IT has evolved. And that is why IT audit has also what? Evolved. So as a result of the evolution of the IT in audit, then the auditor will deploy what we know as what? Computer assisted audit techniques. The auditor will do what? The auditor will deploy.
We can't hear you, Sal.
Come in, I'm trying to do something.
Okay.
I'm trying to highlight what I'm saying so that people will say that where am I reading from? I'm trying to, is this side? This is where I'm talking about, this side here. You can see computer assisted audit techniques. That's what I'm trying to explain. Now, computer assisted audit techniques has come to stay. Why? Why has it come to stay? It has come to stay because the audit has evolved over time. So what we do basically now, we use IT to achieve audit objectives. So computer assisted audit techniques are those techniques that enables the auditor to use IT system as a source of gathering audit evidence. Okay, as a source of what? Gathering audit evidence. As a source of what? Gathering audit evidence. Okay. So ordinarily, before the advancement of IT in audit, the auditor would have deployed more of a questionnaire, more of interview, more of what? Flowchart to be able to evaluate the internal control system. But now, because everything has gone electronic, everything has gone digital, right? So there's a need for the auditor to also want to be transformed. And because of this transformation, the auditor will apply computer-assisted audit techniques as a way of what? Generating or obtaining sufficient and appropriate audit evidence as regards the client engagement. All right. So CATs, like I said, they are tools that are used in test of controls. Please note it. CATs, computer assisted techniques, are tools used in test of control. Is peculiar, is specific to test of control. That is the only place where it's only in test of control you can apply computer assisted audit techniques. So please put that one on your left hand so that you don't use it to eat. Put it on your left hand. Okay. Now, this cat that I just explained now, this cat that I just explained now, right? There are three types. All right. But the whole essence of this cat, let me explain. When you to use cat, first of all, you must have been trained. First of all, you must have been trained on how to deploy because it's a software that is installed, right? It's a software that is installed. Either it's installed on the client server or we have some that are installed on the auditor's system. On the auditor system, okay? Now, let's look at the types of cards that we have. Now, the cards that we have, right? They are what? They are of two types. The audit software, that is a type of card, is used when you are conducting what? Test of detailed transaction. The audit software is a tool that is utilized when you are conducting what? Test of detailed transaction. Why test data is a tool that is utilized when you are conducting test of control. So what I said earlier, that CAT is used for both test of control and test of data transaction. But test data that we have here, this one, is mostly used or is suitable for test of control. And we're going to explain every one of them as we go on now. Okay. So bear that back of your mind, there are two types of CAT. Audit software and test data. Audit software is to test of details. Test data is to test of controls. Okay. So let's go on. Now, we are looking at, let's explain what we mean by audit software first of all, so that everybody will be on the same page. Now, audit software is used to interrogate a client system. Okay? It is used, is a software to interrogate what? A client. What do you mean by interrogate? In IT, the suitable name is what? Is to query. Is to what? Is to query. Let me explain. So when your system crashes now, let's say you're using a system and it crashes, what do? You query the system. You query the reason why your system has crashed, or you query the reason why your system crashed. So the auditor, in this instance, we use what? We utilize the software. And this software, they are software that can be purchased off the shelf. What do you mean by off the shelf? You go to any IT market. You know, in Lagos, you have IT market. IT market in Lagos is at Computer Village. You go to Computer Village, ask them for audit software. They'll give it to you. They are obtainable on the open shelves. Okay? It's not something that is very difficult to see. It's something that is easily that can be easily found. It's everywhere. All right. So one of the places where you can get it in Lagos is to go to Computer Village. If you go to some other places where you know they sell gadgets, IT gadgets or phones or software, ask them also there. They can also get the audit, you can get the audit software purchase from there. Now, the audit software, they are set of programs, okay? The audit software, they are what? They are set of programs, right, that are deployed. They are set of programs that are deployed in order to ensure that the information provided or the data provided by the client is what? Is sufficient and is what? Appropriate. All right? Is sufficient and is what? Appropriate. All right? So that is what we mean by audit software. So what do we mean by audit software? So that one, you buy it, you install it on the client system. You buy it and you do what? You install it on the client server. The client will have a server. So the server is like a data repository. Okay? I don't know how many of us have heard of server before. I don't know. Because I shouldn't assume that everybody has heard of server before. Okay? Server is like a database. Okay? It's like a database where every department within an organization can what? Can explore concurrently at the same time. So what I'm saying is that if you have a server, account department might be accessing information from that server, HR and admin can be accessing information from that server, legal, sales marketing, operations can be accessing information from that server, all of them at the same time. We call it what? A server. All right. So this audit software is usually installed on the client server. How do you go about it? Now, going about the installation and implementation is out of the syllabus. Nobody is going to ask you, how do you install it in ICAN? Nobody. But what they can ask you is that, how do you utilize it? How do you make it? How do you utilize it? How do you apply it? So what you do, or what is being done, is that once it's installed on the client server, the module for that software, right, would have been customized such that it is only the external auditor that will have access to that particular module for the audit software. So what that means is that if you have like SAP in your organization now, or you have what do you call it, Microsoft Dynamics in your organization, or you have QuickBooks in your organization, or you have Sage in your organization, right? They will find a way to install the audit software on the what? On the Sage storage server, whether it's in the cloud or it's on premise. Premise here means that it is domiciled physically, okay? Whether it's in the cloud or it's domiciled physically, we call it on premise, right? You find a way to install the server there. Now, once it has been installed, like I said, it's a set of what? Programs. It's a set of what? Programs, computer programs. What do you call computer programs? The common name for computer programs are what? Specific instructions. Okay? Computer programs are likely to what? Specific instructions that are used in communicating in a computer. You know, computer, we don't speak English. The way I'm speaking English, that's not the way the computer communicate with one another. They have a machine learning language. Okay? You have machine learning language that they use to what? Communicate. So that machine learning language consists of what? Different programs. I hope you are getting it. So these programs are what they will use to what? To communicate. So what that means is that for you to be able to utilize all this software, first of all, you must have an understanding of some of these programs, like the SQL, structured query language. You must understand Python, Python language. All right, you must understand some of these computer programming language, because you are going to be running them. You are going to be using the syntax. Okay, the syntax are a set of instructions also that you use to what? To query a system or to query a database. All right, to do what? To query a system or to query a what? A database. All right, so what you do is that you run those programs. Once it has been installed, the module is exclusive to the external auditor, wherever he is, whether it's within the organization or it's on at the remote side, anywhere he is able to access transaction. So the audit software has been programmed in such a way that any transaction that is done on the server should what? It should capture it and store it somewhere on the server that will later be accessed by the auditor. So take for instance, you have an auditor that is auditing UBA, United Bank for Africa. And last time I counted, UBA has over 300 branches scattered locally and internationally. And you know, you agree with me that this UBA is a bank. They carry out audits every year. So how do you think the auditor that is auditing UBA will be able to give an reasonable level of assurance that the financial statement or the financial reporting is what? Is free of what? Material misstatement. Because the volume of transaction that they do across all their branches cannot be what? Cannot be quantified in like that. So it involves large volume of transactions. And you expect the auditor to look at everything. The auditor will look at everything. 2 years from now, we don't have done much. So what will you do? They will deploy the software. So the software function is to make it easy for the external auditor to be able to what? Obtain information on the server, online, real time. I hope that is clear. Online, real time. I need to make this I need to make this very clear so that you have a better understanding of how this thing works. I'm sorry that some of us we are not IT savvy, but nonetheless, right, is not it cannot be excused. I cannot say because you don't understand it or something that you don't like, right? I should ignore. I cannot ignore it. That's why you see me. I'm trying to break it down to the point where you'll be able to understand it as much as possible. All right. So, like I said, the only software is installed on the client server and is programmed such a way that the administrator can access information online, either it is in the office or outside the client office, you need to access that information. All right. Any question before we proceed? Question, comment, observation before we proceed? You are good to go, right? Okay. The second one is the test data. Now, test data, like I said, is most relevant to test of control. All right. So what does this do? Now, what this does is that unlike the other software that is installed on the client server, these ones can only be utilized per, per time, per process per time. For instance, you want to check whether the internal control system around payment to suppliers is effective and efficient. You're going to deploy test data on that once. You cannot deploy test data on internal control as a whole. No, you take it one by one. That's what I'm trying to say. You take it what? One by one. Look at it here. That will not be as if what this person say. Look at it here. That is, the potential problem with using test data is that it only give audit evidence at the time the test is what is processed. It's one per time. That's what they are trying to say there. That is the understanding of what they are saying in that instance. So let's say you want to test like five areas of the internal control system. You are going to utilize the test data 5 times. You are going to deploy it what, 5 times to address each of those areas of concern. That's how it works. Okay. Now, what happens also, just like the other software, right, is also a set of what computer programs. But what it does is that it is used to what? To take samples. You use to do what? To take samples, which you are going to what? You are going to analyze and confirm whether those controls that are put in place in that particular process is what? Is sufficient and is what? Appropriate. Hope that is clear. Let me give an perspective to it. So let's say you have a calculator now, right? You use they gave you um inventory report, daily inventory report for let's say for 1 week, or weekly inventory report for 1 week. I'm putting a percentage to it. So now give you a calculator. You now have a calculator. You added up all the inventory for 1 week. You have a figure. That figure you add, right, is known as what? The predetermined result. Because you use what? You use calculator to do that, to get your answer, to arrive at that predetermined result. Now, what do you now do? Those reports, that weekly report, you also subject them to what? Test data. So test data will process the report. Your intention, your aim, your objective is to be sure that at the end of the day, what you have as your predetermined result is what you are going to get from processing that same information on the what? On the test data. If there is any deviation or variance, that means that the internal control system or the internal control system is weak because you're supposed to arrive at the same value. That's what they said that the use of test data involves the auditor processing sample of data throughout the system and comparing the result obtained from the processing with the predetermined results. And that's why I use the example of what? computer information, report generated using calculator, and the same information, subject it to test data and see when you're going to arrive at the same objective. If your objective are the same, that means that your internal control system is strong or efficient and effective. Any question, comment, observation? Question, comment, observation? You are good to go. All right, so let's look at the advantages of CAT and disadvantages of CAT. You agree with me that CAT has come to stay in audit, right? So it has its own advantages. Likewise, it has its own disadvantages. So let's take them one after the other. Advantages of CAT. Number one, independently access the data stored on the computer system without dependence on the client. You see what I'm saying? What they are saying here is that because he has access to information that is stored on the server, he does not need to wait for the client management to present or to prepare any information for the auditor to work with. He can obtain anything he wants from the client server, and that's an advantage. That means you have taken care of the instance where the management will give what wrong information, or they give you related information. You are accessing the information online real time on the server, on the client server. Number two, test reliability, test the reliability of client software, that is, the actual application controls, the result of which can then be used to assess control risks and design further audit procedure. What do you mean by this? What they are saying here is that when you deploy CAT to the client business environment, what you are doing at that time is that you are trying to check the adequacy, okay, or the reliability of the client software. For instance, if the client is using Tally now, right? I'm just giving an example. Let's say it's using Tally. Now, when you subject that information to test, right, using Tally, if you don't arrive at the same value as when you use the what do you call the calculator to calculate it, if you don't arrive at the same value, what that implies is that your tally cannot be reliable. The information contained in your tally cannot be reliable. That means there is a risk of material misstatement in the financial reporting. Okay? So later we'll be asking questions. How will you be able to know that there are issues? Now, if after you have posted a transaction on, let's say on your ERP, you have posted a transaction, right? And it already hit your financial statement, let's say statement of profit or loss. And you came tomorrow and discover that the information, what you have posted yesterday, has been deleted by another person. What does that mean? That means that there is a possibility that any information you have already imputed into the system can be what? Can be changed. Can be what? Can be changed. And if the information contained in the financial reporting can be changed, that means that there is no reliability on the information provided by the client. All right. Then another advantage of CAT is that it increases the accuracy of audit tests. The audit test accuracy is what is increased. Why? Because computers hardly make mistakes. Not that they don't make mistakes. Even ChatGPT, if you look down, it has a disclaimer there that sometimes I make mistake. He has it there in ChatGPT, but they rarely make mistakes. So that means that there is higher possibility of obtaining accurate audit test than when it is done manually. All right. Then another advantage of CAT is that when you perform audit test, you're able to perform it more effectively. Okay, which in the long term will result in a more cost-effective audit. What does that mean? So if you have CAT, number one, your audit will be faster. So when your auditor external auditor comes to audit your organization, if they don't have CAT, they might use 2 weeks or 3 weeks. But once they have CAT, they might end up spending or utilizing 1 week. What does that mean? You know that when auditors come to your organization to come and audit, they pay you on different factors. One of the factors is the time spent on the audit. If you're supposed to spend 2 weeks and then they're spending 4 weeks, the calculation of the audit fees will differ. It will go up because they never anticipated that they will spend beyond 2 weeks. But then they are spent beyond 2 weeks, and what they initially quoted was 2 million. That means if they are spent for 4 weeks, you have to pay them 4 million. That's what we are saying. Okay. So what we are saying here is that as a result of CAT, it reduces the time, energy, resources deployed when there is an audit engagement. So it is more what cost effective. All right. We move. Disadvantages of CAT. Now, as good as CAT is, right, it has what? Its own disadvantages. What are the disadvantages of CAT? Number one, it can be expensive and time consuming to set up. All these CATs are denominated in dollars. All these CATs are denominated in dollars. And you know that Nigeria forex, foreign exchange rate, right, is alarming. So that will make the price to go up. All right. So in some instances, the auditor or the audit firm customize their audit and computer-assisted audit techniques so that when they go out, they stand out. All right. Number two, disadvantage is that reluctance from clients, okay, to have the card installed on their system, on their server. Client permission and cooperation may be difficult to obtain when it comes to what? Installation of the card on the client server. It's like you are putting a CCTV in my room or in my convenience. That's what it means. So sometimes the reluctance is always there, which is a disadvantage. Number three, potential incompatibility with the client computer system. Potential incompatibility with the client computer system. Now, what does this mean? So what we are saying here is that sometimes you say you want to deploy CAT, but you see that the system of or the CAT, the system of the CAT, as computer system techniques, might not align with your computer system or your server. So it becomes problematic. It becomes what? Challenging. Hence, the auditor and the client will be looking out for ways to what? To get it what? Done. Okay? Now, another disadvantage of this CAT is that you must have advanced IT skills and knowledge. All right? To be able to do what? To be able to perform, to be able to utilize CAT. Remember, I said that when you utilize CAT, you must go and learn what? SQL, structured query language, or you learn Python language. Because the computer system, they have a way of communication, which is what? Machine learning language. All right? Then the other thing, another disadvantage is that the other thing may not have the knowledge or training needed to understand the results of the CAT. What we are saying here is that um, you need to train, all right? The other thing may not have the knowledge or training needed to understand the result of what we are saying in essence is that maybe there's a typo there. It's not that easy. Before you can even understand the CAT, you must have undergone training. You know, I said that you are going to utilize what? SQL or Python. So if you don't understand it, how will you be able to interpret what you have in CAT? Okay, so that's a mismatch there. All right. The what you have there, what's supposed to be there is that the other team may the other team may have the knowledge of training, or we need to have the knowledge or training needed. Okay, knowledge or training needed to understand the results of CAT. Then lastly, when you use CAT, right, it can corrupt your the data you obtain from CAT can be corrupted, okay? Or your server, information you have on your server can also be corrupted during the application of what? Of cards. What do you mean by corruption? Or corruption of data? So that means that the information you have already will just be what? Will not be accessible any longer. So we say that, so in IT, when you can't access that information any longer, though it was there before, we say that the information of the data has been what? Has been corrupted. Okay? Any question, comment, observation? Are we together? Hello, are we together?
We're together, sir.
All right,
Yeah,
thank you.
together, sir.
Thank you, thank you. So that's for the cat. Now, next thing we want to look at is the transaction cycle. We want to look at what? Transaction cycle. What do we mean by transaction cycle? Now, by transaction cycle, what we mean is this. You go to any organization, anywhere in the world, there are certain cycle, there are certain transactions, or there are certain aspects in a client system that are common. There are certain practices that are what? That are what? That are common. For instance, if you want to go and audit any clients and areas that are susceptible to what? Manipulation are these areas that we have here. We call them what? Transaction cycle. Okay? So the auditor needs to focus more on this transaction cycle. Why? Because there is a risk of material misstatement. There's a risk of what? Material misstatement. There's a risk of material misstatement in the financial statement where the auditor do not look at, or the auditor does not review the transaction cycles, because these are the avenue where fraud can easily be what? Perpetrated. And the major transaction cycles are sales, purchases, and payroll. And I'm going to explain to us how each of these can result to what, or can be manipulated to perpetrate what? Fraud. Let's take, for instance, sales. Now, there's a thin line between sales and revenue, right? What is sales? Sales is simply, oh, you fulfill an order. The customer requested for certain products. What do? You supply the product. Once you supply, what have you done? You have made sale. But sales is not complete until when you receive what? Revenue. So most marketers or most sales reps, they believe that once they're able to push out the product, they have made sale. Yes, that is, you have just completed one part or one aspect of the sales. For sales to be complete, you must be able to what? Obtain the what? Revenue. And that's what you have in your IFRS 15, revenue with contract. That is, revenue is only recognized when it is what? When it is earned. You can't recognize revenue when it is not earned. It is only when it is earned that you recognize it. So when you sell to a customer, and if one customer promises to pay in 2 weeks, and the customer has not paid, what that implies is that that will now be standing as what? Account receivables. You stand as what? Account receivables. Because it's outstanding. All right? That is what we need to know. So let's continue. I'm still explaining that. Don't worry, I'm still explaining that. All right? Now, in sales, like I said, is susceptible to what? Manipulation. You know that you can have what we call fictitious sales. You can have what we call what? Fictitious what? Sales. And this has happened before in Nigeria that I was even aware of. It happened in Jumia, your popular Jumia that you know. There was a time around 2019, 2018, thereabout, as a way to encourage Jumia staff to be making some extra cash, okay, extra funds to augment their living wage. The organization introduced what we call what? J-Force. What does it do? Now, this J-Force, the rest of you can Google it, it's everywhere, it's on the Google, it's not secret. All right? J-force, what does it mean? What J-force does is that, or the meaning of J-force is this: go and make sale. Once we have confirmed that the revenue has been received, we pay you a commission based on the targeted sales that we have agreed with the staff, which is a laudable project. That means they want all the staff to work, to have some living wage or living wages. But guess what? When after a while, because the junior was fulfilling his promise, so they were paying the staff that engage in what? In sales. So what do they do? So some of them, they now started to create what we know as what? Fictitious sales order, or fictitious sales order. What do I mean by fictitious sales order? So they had an arrangement with the supplier. Supplier will present what? We present what? An invoice. Okay? Now, when you present an invoice, the staff will collect the invoice, right? And what happened at the end of the day is that after collecting the invoice, the staff will present that invoice, but the actual sales never happened. They never sell. What they just do is that they just transfer documents between the customer, between the supplier and the staff, because they are the one making the sales. Okay, but the company did not get to know, and this thing went on for like 3 or 4 months before the company was able to detect that they have paid commission to this staff, but there is no corresponding revenue to that effect. They now started to probe further. What did they do? On a particular day, unannounced, as the staff were resuming, the management of Jumia has already positioned the law enforcement agency agents. They are already on ground. So as they are resuming, all those that perpetrated that heinous act, all of them were picked up. And that was where they were able to confess.
That she has deleted that paper too. That she's not
Do
coming
you
back. So they
understand?
would have locked gates, locked everywhere. Madam,
Please mute your mic, sir.
Come on, be me talking.
Mr. Marcelina,
They watch.
mute your mic.
But it does not, this kind of thing, don't start it. It's better
Marcelina, mute your mic.
because they need to already.
Thank you. So, as I was saying, you can see the effect of that. You can see the effect of that. So, if it was not properly tracked, or it was not promptly detected, Jumia would have lost more than what they lost that time. I hope you understand that. So that is why I said all what I put here as transactional circles, they are conduits. What do you mean by conduit? They are avenues. They are channel to what? To defrauding the organization if those controls are not put in place. But at the end of the day, it's going to impact whatever happens in this area will impact the financial statement. Purchases. How is purchases? How is it susceptible to what? Manipulation. Now, somebody can go and buy a stuff. For instance, I can tell a staff, go and buy printer. The printer, go and buy us MFP, multifunctional printer. They give the specification. And the staff will collude with the supplier and say that, our supplier, give me an invoice of 800,000. Whereas you bought the MFP printer for 600,000. You understand what I'm saying? How do you verify that? How do you verify that? Unless you are doing some, you perform further audit procedure to you to vouch that value was inflated. That value was what? Was inflated. So purchases is another way, another area, another transactional circle that can be utilized to perpetrate what? Fraud. You have what? Fictitious what? Purchases as well. The instances, there was one that I saw on social media, I think last week, where a woman that owns a car and her driver had a serious issue at a filling station. I don't know how many of us saw that on social media. When they got to the filling station, as well, maybe it's a usual filling station that they used to buy their petrol for the car. So the driver has already signaled to the petrol attendant. So when the car positioned, the petrol attendant, not knowing that, unknown to the petrol attendant, that the owner of the car, the lady, was looking at how it's going to end. So what happened is that while they dispense the fuel, they dispense 20,000 naira worth of fuel. But when they ask the woman for the debit card or bank card, they punch 50,000. They punch what? 50,000. Now, after making that payment, the woman just came down and said, I saw all that happened. How come that you sold 20,000 and you asked me to pay for 50,000? Eventually, the petrol attendant was taken to the manager of that filling station. And the manager said he's going to take it up that, first of all, he should refund the woman extra 30,000. And the guy confessed that they wanted to share the money between himself and the driver initially. So you can see how this can also be an area. How many of us have cars? We tell our words, go and buy petrol, go and buy this, go and buy that. They tell you that the money is not complete. Add more money, send more money. Especially when you say to go and buy some things that are not receivable, they are not receipted. For instance, somebody go and buy yam now. The yam said that you don't have receipt. If you go there and say, I bought that yam 20,000 naira or 15,000 naira, who is going to dispute it? He say go to the market. He goes to the market, see that most of the place where they sell yam, that was the price. How do you dispute it? So that's another area. Another area that's also prone to fraud that the author needs to look at is payroll. Payroll, we have ghost workers. What are ghost workers? Who are ghost workers? These are staff that are not existent on the payroll, yet they receive salary at the end of the month. We call them what? Ghost workers. So how do you manage this? So as an auditor, when you go to audit, you need to look at this area, payroll. You look at whether they are paying the statutory deductions or statutory remittances. Okay, the likes of the payee, pension, ITF deduction, revenue levy, and all of those things, they are paying it as a when due. And you also need to look at is that you look at the previous payroll for the previous month, compare with this month. Why are you doing a comparison? You want to be sure that all the staff that appeared last month are also replicated in this current month. Okay, and some instances you have some staff that existed the system last month, so their names will not be in this month. And we have some new staff that joined in this month that were not on last month. All of these factors will be considered so that the author will be able to conclude that truly there are no ghost workers or there are ghost workers. Okay. Then another area that the author will also need to be able to focus more attention on is on the aspect of what? Bank and cash. So how? Now, the bank and cash, if there are no proper tests and if there are no proper internal control system, will be susceptible to what? To manipulation. For instance, if your account department staff will not prepare bank reconciliation statement on a monthly basis, how do you determine how much comes in and how much goes out? It's very, very difficult when the bank reconciliation statement are not done at the end of the month. Okay? And you agree with me that bank statement can be doctored, can be manipulated, can be adulterated. That's why the bank will tell you that sometimes they will tell you that do not rely on bank statement that is being funny because it can be what? It can be adulterated. right? And cash also can also be what? Can also be stolen. How? So you have a cashier that is in charge of cash within an organization, right? And you discover that that particular staff, who is the cashier, has already understood the system such that on weekends, Friday, which is the last day of the week or the working week, he will take money, he will take some money from the safe and go and use it and go and spend it on himself and his family. And before Tuesday next week, he or she will have done what? He will have reimbursed or gotten the money back. So if there are no controls like the surprise cash count, you do surprise cash count. That will be able to know that somebody can come anytime to verify my cash, what I have in my what in my safe. And the same thing is applicable in banks. So in banks, which is their core area, internal control issue there is that aspect of what? Cash, because what they are trying to secure are depositors' fund. So if the auditor gets to know that there have been some sharp practices to depositors' fund, what we'll do is that going to pay what? A surprise cash, a surprise visit to the branch, to the bank branch or the branch of the bank, and do what? And do what? And perform what we call what? Um, Cash verification, or go to the vault and perform we'll perform the count verification to verify the cash that you have in the vault, whether it mirrors what they received or what was posted on the system. All right. Now, inventory is another aspect that can also be what? That can also be doctored. IAS2 talks about inventory, and it says that the two methods to value inventories are either you use weighted average or you use first in, first out. So if the management has gone to use last in, first out or standard costing, one way or the other, they will have either inflated, either understated or overstated the inventory balances. The another area that is also prone to manipulation is the aspect of what? Revenue and what? Capital control. Sometimes you see that anytime there is a capital project going on in an organization, these are some people get richer. Why? Because they will have inflated the figures of the what? Of the contract. So as they are buying, as they are spending the money, they are reaping the profit. So as an organization or as a child accountant in the making, as an assurance provider, we must ensure that we put our searchlights or our beam lights on this area in our various organizations. Who knows? If that's what you are going to do one day, and before you know it, the management will recognize your performance. All right. So there's a question here. They said, for example, purpose, there could be a case study that describes a transaction cycle of a client entity. You may be required to identify suitable internal controls and test for controls that will be appropriate. All right. Alternatively, you're required to comment on control weaknesses in the system. All right. You understand that? What we are saying here is that in an exam, you might have a question that tells you that describe the transaction cycle in a client entity. When they ask you describe a transaction cycle in a client entity, just come and give them, explain these ones in proper perspective. All of this: sales, purchases, and payroll, bank and cash inventory, and revenue and capital expenditure. All right. So the following sections of this chapter describe the general terms of control objectives, control for achieving those objectives, and ways of testing the effectiveness of those controls for which of the main transaction cycle. Remember, however, that in the exam itself, you're required to apply this general concept to a specific what? Case study. Controls and tests of controls in examination. So let's go. You see it's there. Still, you get to that point, don't worry. You are going there now. So you may find it useful to think about controls and tests of control in terms of what? Risk. What are risks? Okay, what are risks that witnesses, what are the risks that witnesses in the transaction processing system could mean that the financial statement will not give a true and fair view? That there is a risk of material misstatement, that's what we are saying. So if the auditor has concluded that there is a risk of, there is high risk of material misstatement in the financial statement presented, then he might need to qualify his audit opinion. Now, when you talk about control objective, what do you mean by control objective? Control objective simply means what are the purposes of having those control? For instance, what's the control objective of having a door in your house? What's the control objective of having a door at the entrance of your house? The essence is to do what? Is to safeguard assets, life, and property. I hope you understand. So when they ask you in examination, what are control objectives? Just look around that area. That's the purpose of having those controls in place. All right? So after you are able to identify those control objectives, right? The next thing you to do is to do what? Is to see how you are going to achieve those control objectives. How you are going to do what? Achieve what? The control objective. All right? So for the editor to be able to agree on this or to work with the client management on this, we have a similar example here. This is it. The auditor is auditing a client, and the test of control is to check what? Orders for the goods or services are made without approval, authorization. This could mean goods or services are ordered for personal rather than for business use. You understand what I'm saying there? So you order goods for goods and services. And necessarily when you order, you're supposed to obtain approval from management. When in this instance, there was no approval obtained. So what would the auditor do? What would the auditor be looking out for? You will ensure that all purchase orders must be properly authorized. All purchase order must be what? Properly authorized. Okay? The second one, orders may be placed with supplier who are not on the approval list. Now, what we are saying here is that they want to do what? Fictitious what? Purchase. The fictitious purchase is that purchase that is done using a supplier that is not on the approved supplier list. So what should be done? Orders should not be placed. Okay? Orders should not be placed with no approval, no approved supplier. That is, those suppliers that don't fall in the category of approved suppliers. They should not buy from them. Okay? They shouldn't buy from what? Should not buy from them. All right? Then the next one. For large orders, suppliers are not asked to submit tenders. Okay? When suppliers are asked to tender, the order might not be given to the supplier, quoting the lowest price. So what do we mean? So you want to buy a car now. Let's say you want to buy a car for your organization. Okay? You want to buy a car for your organization. And you ask that all the suppliers that you want to buy the car from should submit tender for what? Tender for what? For purchase of a new car. So what we have seen is that sometimes, because the supplier, they have a rough idea of how they can outsmart the other competitor. What will they do? They will quote a very low price. And what they will have done is that they will have acted based on what? Insider information. Okay? So when they do that, what happens at the end of the day is that the pricing for that car that they want to purchase will no longer be what? Competitive. What do you mean by competitive? Let me use an analogy. So you want to buy orange. There are 4 sellers of orange. or let's say there are three sellers of orange. A, seller A sells orange 100 naira. Seller B sells orange 105. Seller C sells orange 98 naira. With that, you can say that the prices are what? Competitive. Okay? But let's say seller A sells orange at 150. Seller B sells orange at 80 naira. Seller C sells orange at what? 110. The prices are not competitive in that order. So what you don't do, you just should ensure that there's what? Competitive price quotation. Okay? And should obtain and that should be obtained for all and that should be obtained for all large orders. Okay? Are we together?
Yes, sir.
So thank you. Now,
Yes,
test
sir.
of controls. Yes, I'm with you. You have a question?
Oh, we are with you. We are with you.
You are tired, right?
We are with you,
Yeah.
sir.
Okay. So that's why I started at 8:30. Now we continue, right? So other things that we need to do in order to check that all these areas that we look at do not eventually turn up to conduit or channel for perpetrating fraud. That's why we do all of these things. So that's why we perform tests of control and check whether there is what? There is proper segregation of what? Duty. That this is not the case that only one person is doing handling everything within the organization. That it has been what? It has been spread. In the department, you have the account, you have the chief accountant, you have the management accountant, you have the account manager, you have all of them there. So we have what? Clear segregation of duty. All right. Then the auditor will also look at whether the purchase order that they use, they are what? They are pre-numbered or yes, sequentially numbered. What do we mean? So if we have purchase order that are numbered, it will be easy for you to control or to detect when they tear out any part of that what purchase order. Because it's what? It is numbered. And you tear each purchase order one after the other. You have to write 100 before you write 101. Okay? So that's what the auditor will also be looking at. Then the auditor can also ask the management to provide documentary evidence that the procedure for placing supplier on the approved list operates as intended. Okay, what that means is that anybody that you want to buy from, they must be from that what approved suppliers or vendor list. Okay, and purchase order can be checked to make sure that they contain an approved supplier referencing their number. If it's an approved supplier, it will have a what? A serial number, depending on how the reference, the utilize referencing, okay, within the organization. The enlarged orders can be checked for management authorization. This is one I explained earlier on payroll system. That is, you calculate the gross wages and salaries, recording wages and salary payables in the account, the calculation of tax and other deductions, the payment of staff wages and salary. Salary wages and what? Salary. So look at this. The one we are looking at now is for the payroll. So payroll, they don't want to test the payroll. What will they do? They don't want to test payroll. You look at what wages and salaries may be paid to individuals who are not employees. What does that mean? These are ghost workers. How do you curtail ghost workers? Ensure that only real employees are paid. Examples, wages and salaries should not continue to be paid to former staff who has left or that payments are not made to phantom employees. Phantom employees is the same thing as what? Ghost workers. Okay. Next, still under payroll, employees may be paid for work they do not do. That's what the auditor is want to check. So it will ensure that all employees are paid only for what they have done. For example, to make sure that the employees are not paid for overtime work if they have not worked for it. That's why in organizations where they allow or when they make overtime payments, they also have a system of what put in place to document, okay, the name of the staff, hours, date or I mean time of resumption and time of departure. From there, they are going to compute the overtime using other parameters. Okay, that means not everybody is supposed to be getting overtime. If you don't show it, there may not be need for you to get overtime. Then another area that will also be testing is gross wages and salaries could be what? Calculated incorrectly. What will it all do? The auditor will ensure that the gross pay is calculated what? Correctly. All right? Any question? Question, comment, observation? So we go to the next one. You know, I said that we are looking at everything. The one we are looking at now is from the angle of what? Um, Non-current assets. That is the capital and capital expenditure and the likes, okay? Now, the main risk associated with non-current assets are as follows. Non-current assets which the company does not need could be what? Could be ordered. That's the risk. Number two, expenditure on non-current assets may be recorded at incorrect amount so as or as revenue instead of what capital expenditure. So revenue expenditure are what that are recurrent. Okay, we call it recurrent expenditure. Capital expenditure are like once in a while. So effort was made to ensure that revenue capital expenditure are not captured as what revenue expenditure, and that's the reason why some organizations we have some staff, dedicated staff that review the postings on the accounting package or on the ERP, able to reduce the risk of material misstatement as contained in the financial statements. Okay. So for capital expenditure, the objective of authorization, all expenditure on non-current assets should be properly authorized. That is, appropriate authorization should be in place, and documentation as well and analysis should be produced to support capital expenditure requests. What that means is that you understand what we call CAPEX. There's a document they call what? CAPEX. So when you want to incur capital expenditure, you present what? CAPEX. That we are trying to say there, okay? And such CAPEX must be what? Must be approved. What do I mean by approval? Must be signed by the um, must be signed by the designated signatories, okay? So many tests of control, right? When you talk about purchase of current assets are similar to those of purchase of inventory. Yes, we are going to buy, but the difference is that we are looking at inventory. We are buying inventory. We are looking at IAS 2. We are looking at assets. We are looking at IAS 16. That's what we are looking at. Property, plant, and equipment. That's what we are looking at. All right. You must ensure that, for instance, when you buy an asset, it's not only the invoice amount that you are going to consider, the cost of transportation, the cost of the commissioning and commissioning, the cost of putting the asset to use, the cost of servicing, all of this must be factored in. All right. The next one, still under non-current assets, recording. So the test of control here is that the auditor will check that all expenditure on non-current assets should be properly recorded. Right? And expenditure should be properly analyzed as capital or revenue expenditure. So invoices must be analyzed and account code entered on the invoices. Management should review the analysis of purchase item as capital or revenue item to ensure compliance with standard accounting practices. All right. Then the auditor should check that the capital and revenue analysis of the invoices. The auditor should also check that entries are made in the correct account of the non-current assets. Okay? So now in smaller entities also, there might be need for test of controls to be what? To be performed. All right? In smaller entities, there will be need for what? test of control to be performed. So the control system is similar in smaller entities, are often less sophisticated than those in larger entities due to lack of what resources. So in the case of smaller entities, the auditor will look for the existence of minimum business controls, okay, that should be what identified, recorded, and what tested as in any other system. So the auditor is unlikely to be able to use the controls existing in a small entity, okay, in a small entity as a basis for what? For system-based approach to the audit. Therefore, a large amount of substantive procedures, right? This is a typo. Substantive procedure that should be here. Substantive procedure is likely to be what? To be adopted. All right. So that is what we are saying. What we are saying here is that regardless of the size of the organization, if the entity is small, then that means you have to stick to minimum control requirements. That means all the ones supposed to be applicable might not be applicable because of the what? Because of the size of the organization. So as an auditor, when you go to an audit, you're able to categorize your client business. Is it a small? Is it medium? Is it an enterprise? Or rather, is it a big organization that has already what established? All right. So that is what you need to know as per this. All right. So let's look at this example here. We have an example here. Now, this chapter has presented list of risk, control objective, internal control, and test of control, okay, for different aspects of business and accounting operation. You do not have to learn all of these lists because each accounting system in each business differs. What that means is that what's obtainable in company A might not be obtainable in country B or in company B. And their control objective and appropriate controls also differ. So what you may need to be able to do in the exam is to apply general principles to all other any particular system of business described in the exam. So what they are saying here is this. Now, of all the control that we have looked at, right, there are some control that are what? That are generic in nature. Because you cannot apply or you cannot replicate what you have in company A in company B. You have to be what? You have to be innovative. You have to be ingenious, right? And for you to be ingenious, that means you have to come up with what? General principles, okay? General principles principles that are generic. So saying that the controls that are put in place are effective and efficient. Okay? This is another example. Your only client operates a chain of fast food restaurants. 6 types of standard meal are eaten when customer place their order. The meals are ordered weekly by the restaurant manager from the distribution center at head office. At the end of each week, unused meal from the previous week are sent back to the distribution channel for disposal. Required, what are the controls which your client should have in place? Now, this is a typical exam question. They can ask you, what are the controls you need to put in place, looking at the type of business that is operated here? So to answer, the manager should be required to produce monthly reconciliation of meals bought, right? Meals bought, meals sold, and meals returned to the head office. That is what we call a reconciliation. Or meat sold per this reconciliation should be agreed to the monthly sales figure. Okay, a difference will indicate what steps. So by the time you are done with this reconciliation and you just suppose it with your sales value or your sales figure, it's supposed to be the same. But where there are differences, those differences will be accounted for as what? As what? As theft. All right. Then where returns are above predetermined level, management at head office should investigate to identify over-ordering or a downturn in demand. What we are saying here is that when goods are returned, okay, when goods are returned by customers, there's a need for the management to be informed, okay, and carry out what? Investigation. The rest of this investigation is to identify whether there is over-ordering or a downtime in demand. Over-ordering means that somebody said, I want 10,000, you give the person 2,000 and does not have space to store it. That's over-ordering. Okay, you understand? Next, another area where controls are very low, management at head office should investigate to ensure that customers have not been turned away due to lack of what? Inventory. So where the returns here means sales, right? When they are low, management should further investigate the reason for what? Reduction in what? In sales. All right. And see, because when sales reduces, there will be build-up of what? Inventory. All right. Then another thing they also need to put in place is what? Strict physical control should operate to ensure that inventory is not damaged in transit or at the branch. Then there should also be authorization limits should be set for the number of meals any branch can order so that to avoid what? Wastages. So as to avoid what? Wastages. The head office should carry out surprise inventory counts at branches. That is self-explanatory. All right. So, as an alternative, the examiner might require you to identify the risks to which a business might be exposed as a result of what? Poor internal control. These risks are the same as the control objective not being met. For example, for sales, the risk that not all goods dispatched are invoiced. However, it should also be asked to set out the consequences of those risks and suggest controls which should address them. So what they are saying here is that as an alternative, right? The examiner is also looking at how the students are able to detect that there is what? Poor internal control. All right. And when there's poor internal control, what it means here is that the control objectives are not serving the purpose. The rest of the control objectives to do what? To achieve a control purpose. But when the control objectives are not achievable, then that means that you don't have any control in place. All right. Then another example: an entity sells goods on credit. Okay, on credit terms is exposed to risk of invoicing error. Required: state out the possible consequences of the above risk and suggest suitable internal control, which could be what? Implemented to address the risk. What we are saying here is that entities sell goods on credit terms. What that means is that you sell to customers, you don't collect your money on time. So what are the risks? That's what we should look at. Number one, sales and receivables will be misstated. That's when you don't get the right information on time. Now, customers' goodwill may be lost if they are charged too high a price. What that means is that you want to buy something from a company C, and you'll be doing that with 100,000. When you went there the next time, you know that it's not 500,000 because they have a surge. Okay, that is something like an artificial, right? So if something like that should happen, then the customer might be lost, might have a change of heart or change of mind. I say, okay, maybe these people they're no longer they're already filled, right? They don't need any money any longer. Then time taken to correct the errors will result in delays in the payment of invoices by customer and could lead to cash flow. When they don't pay on time after they sell, I said that earlier in the transaction cycle, it will lead to what? Piling up, production disruptions and the inability of what? Raw materials, which are some of the bane of cash control. All right? That's one of the problems of what cash control. Other things, other consequences, if customers have been undercharged, the difference may never be recovered. All right, so internal controls to address invoice checked for accuracy with respect. So the work of internal control is to check that they need to check the accuracy with respect to dispatch note details, price list, and any other discount. So all this information must be at the auditor's beck and call, okay, from time to time. Then data entry edit control. Now, what that means is that the auditor will check whether you can input. So what that means is that once you use an Excel to create a file or a document, there should be some control over the what? Over that file, such that the information in that file cannot be what? Cannot be changed. So the things you can do is to password the what? The Excel file, so that nobody can change or can alter the information you have there. All right. The auditor will check that. Then data entry okay, that's what I just explained. Then authorization, independent authorization of amendment to customers details or price list, amendment to standing data printed out and review. Okay, so you have several examples here. This is the last example. We'll be wrapping up here. That example here is using the list of internal controls in the example immediately above. Set out the only procedure for the use of what? Only procedure that you could use to test the operation of each of these controls. The answer to this is that select a sample of sales invoices, check cost and agree to details per dispatch and master price and list customer specific, if there's any specific discount to customer. All right, I'll talk about that earlier when I was discussing sales. Now, input a sample of dummy dispatch notes and ensure invoice generated by the system is accurate. Then input a sample of dummy sales invoices with prices, amount outside the preset parameters and with incomplete files to ensure that they are rejected by the system. They need to also review amendment forms for customers' details or prices and ensure they are properly authorized. What that means is that you must ensure that your customer details on the ERP you are using or your account system, they are what? They are correct. Because if it's not correct, it could lead to what? Material mistake. That means you'll be duplicating transactions. All right. Then review printout of standing data amendments for evidence of review. So all those printouts from all the ERP as regards amendment to customer details, right, should be what? Should be printed out and filed accordingly. All right. Question, comment, observation? If there are no questions, we are going to call it a day at this junction, okay? So till we meet next time, we are going to continue with chapter 10, all right? We'll continue with what? Chapter 10, which is substantive procedures, non-current assets, all right? So there's no question, comment, observation. Thank you for your time. The class is hereby adjourned. Thank you.